Okay, welcome back. This is usually the time when we go to the mailbag and we, solicit questions from the audience. But we have something a little special today. We have on the line with us precious metals expert Philip Patrick. And first of all, Philip, thanks for joining us.
Thank you very much for having me.
Now, I want to start kind of broad strokes here because I kind of confess to you, I'm a culture guy. I'm a kind of focused on social issues and that sort of thing. I'm not an economics guy, so I might ask some questions, and we have my producer Sean here, and his role is to ask the smarter questions. So I might have some dumb questions, and hopefully you're okay with that. So let's just start basically with the economy. Are you optimistic about the economy generally? Are we on the road to recovery, or do you have a kind of doom and gloom outlook for the future?
Sadly, at least sort of short to medium term, I don't think there's too much good news on the horizon. We have 40-year high inflation, I think, as everybody knows today. Markets are reeling, and the Federal Reserve are in a very tough position right now. In order to get inflation under control, they're going to have to stimulate a recession. They're going to have to raise interest rates to try and kill demand, and that does not spell good times for stocks or housing markets, like I said, short to medium term. So I think we've got to weather some tough times in order to get a handle on these problems. So for the foreseeable future, I think we've got a storm to weather.
How do you explain our current economic state? Just like in layman's terms, if say I'd explain to a 5-year-old like myself, why are we suffering right now exactly? What do you trace it back to?
Look, I trace it back to kicking the can down the road. And we've been doing it for quite a long time here in the US, really since the crash in 2008. What we've been doing is stimulating the markets by keeping interest rates low. I mean, the interest rate environment for the last 12, 13 years has been very abnormal, and it's been designed to stimulate. We've printed in that time period more money than ever before in US history combined, and we've used that money to stimulate the markets. And it was fantastic for a long time because it drove stocks up to all-time highs, housing up to all-time highs. We all enjoyed it. The problem is money doesn't work like that. By pumping money through an economy, it eventually leads to inflation, right? And that's where we are today. So we have these bubbles in the market fueled by fiscal policy. We have 40-year high inflation, and now we need to get a handle on it and essentially let the air out of that bubble. So that's why we have recession on the horizon. And like I said, it came from kicking the can further down the road. What politicians should have done once the economy recovered after 2008, they should have raised interest rates, contracted the economy, and slowed growth. But I think they were greedy, right? There was a lot of political capital. Hey, we turned the economy around, and they kept fueling the bubble, and now we're dealing with it.
And Philip, with inflation, everyone, of course, is feeling inflation right now, so we all have a somewhat of a handle on it. Can you kind of just give us for the average person who might have heard that word, can you kind of give us a working definition of inflation, something we can look at and point to and say, yes, that's inflation?
Of course. So, look, inflation means the things we spend our money on are becoming more and more expensive. The technical definition is the rising cost of commodities and services over time. Anybody who goes to the grocery store sees the price of beef, eggs, milk, the basics, increasing on a daily basis in this climate. That is inflation in its purest form.
So how does the value of our money play into inflation? Because, if the price of everything is going up, naturally, of course, the value of the current money we have is going down. Is that right?
Yeah, the buying power is reducing, right? Dollars are strengthening in this climate. They're not weakening. So dollar devaluation is a little bit separate to inflation. We're seeing inflation here from a number of different areas. Domestic policy here in the United States. I mentioned before money printing on a huge scale being continued by the Biden administration. I mean, the deficit is $700 billion this year. So printing money, flooding the economy with money fuels inflation. Then we have the political side of things, right? The war in Russia and Ukraine fueling rising energy costs across Europe, and of course, food costs across the globe. So these factors are contributing and fueling the domestic inflation we're seeing here in the United States. And of course, this is a global issue now as well.
What about, since we're defining terms, the other one that's become controversial is recession itself. And so there's warring factions saying whether we're in a recession or not, or what it even means. It seems like in Washington, they've I guess it's kind of convenient. They can just redefine the term whenever they want, depending on what they need. So are we in one? And can you give us a definitive definition of what it actually means?
Of course, yeah. Look, it's very clear what a recession means. The definition has been in place for decades. 2 consecutive quarters of negative GDP growth, which is exactly what we've seen for the last 2 quarters. The Biden administration, obviously, recession doesn't suit their political goals, so they're attempting to change the definition. It is 2 quarters of negative GDP growth. That's what it is. We are in a technical recession. There's no other way to look at it.
So we can't rely on Washington, D.C. to save us here. So what do you think from just an everyday American household? They have no direct control over monetary policy. So what can they do to protect themselves in this environment?
Well, you're right. Look, the big picture is very hard to control, right? As you mentioned, our control is very limited. We can go out and vote and push for change so the trajectory longer term can move. And I think that's important because with the Biden administration's appetite to spend, it's going to be very difficult to get these problems under control. They're making the Federal Reserve's job very difficult. But that's longer term change. I think what we all need to do is sort of narrow the scope, look at those around us and say, how can we protect? And I think precious metals, what we deal with here at Birch, very conducive for climates like this. It's a very tough climate for investors, people who are looking at retirement, because the options are limited. Stocks historically have been a very good hedge on inflation. Today, they're not, right? Stock market's down about 20% for the year so far. So stocks are adding to the problem of inflation because your money is coming down at the same time as everything is becoming more expensive. Cash, bonds, not working today. Interest rates are so low. Inflation is higher than the rate of interest on most bonds. So people are losing buying power sitting in bonds or cash. That's where precious metals come in. They're safe haven assets, but more importantly, they're very conducive for climates like this specifically. When stock markets crash, safe haven demand goes up. Gold and silver tend to go up. They doubled in value within 18 months of the last crash. On top of that, inflation drives them up. Remember the definition I gave before. Inflation is the rising cost of commodities and services over time. Gold and silver are commodities. So by definition, they increase as the cost of living does. So I think everybody needs to be thinking about a hedge. How can I protect a portion of my portfolio against the current economic issues? And like I said, precious metals, about the best way to do that in climates like this.
Now, how do you compare something like gold or silver to something like Bitcoin? We're hearing that that's a digital gold. We're hearing that's another hedge against inflation. Last time I saw the price, though, it was falling. So for people who are hearing that, what would you say to them?
Look, gold is ingrained. It's been used for centuries. It's used by central governments today to support currency. It's got a long track record. We haven't seen that with cryptocurrency. In fact, for a long time, cryptocurrency was moving in lockstep with the NASDAQ. So it wasn't providing a hedge. As you rightly point out, as inflation has been skyrocketing here in the United States, crypto has been coming down. So it doesn't have the established relationship with other markets that we see with gold. So I'm not sure it's a hedge. What it is a speculative asset. It grew very well for investors. Now it's going the other way. Are cryptocurrencies a fad? I would say not. I think currency broadly, longer term, it's a natural progression for currency to move digital. But there's a lot of question marks. Will government move into that space? I think at some point it makes sense that they will. If that happens, what happens to all of these third-party currencies, right? Does the government step in and say, hey, we're going to start taxing these things? So there's a lot of question marks there. I personally see it as a speculative asset. Gold, I see on the opposite end of the spectrum, right? You're not going to put money in gold and quadruple it in a year. We've seen that with crypto, but at the same time, it doesn't tend to drop in the same way either. So opposite ends of the spectrum in many ways.
Philip, we know you have a hard out, but I guess my last question is, second to last is, well, how do you explain? So why are precious metals so stable in the long term? And how do you explain the stability of it? What makes them so safe?
It's just how they've been used. If you look at gold specifically, gold is a store of value and buying power, and it has always been that. As an example, if you went back to biblical times, 1 ounce of gold would buy somebody 400 loaves of bread. Today, at $4 and some change, 1 ounce of gold buys 400 loaves of bread. So gold's buying power has always remained consistent, which is why countries use it to support currency. It's actually currency that fluctuates, right? As dollars become weaker over time, it takes more weaker dollars to buy that ounce of gold, hence that inverse relationship between the two. Gold has always been a store of wealth. It's finite, right? It's divisible. That's why it's used as currency. So it's just always been that way, and for the foreseeable future, it always will.
Well, last question, and I have to ask you this because this is just a rule for everyone that comes in the studio, even digitally. I need to know: do you believe in space aliens? Are there aliens in the world?
Listen, I have to say there are so many planets. There are so many. I mean, it has to be somewhere. There has to be life on a planet somewhere. My knowledge here is very limited, but that's my very basic view.
That was the correct answer. I'm so thankful for that. Well, Philip, thank you so much for joining us on the show. And if you want to learn more about precious metals and investing in a stable asset like that, text Walsh to 989898 for a free info kit on diversifying into gold. That's Walsh to 989898. Philip, thanks again. We appreciate it.
Thank you so much for having me.
If you want to join my exclusive fan base, or a cult, that's what it is, we're forming a cult, then all you gotta do is click the subscribe button and ring the bell below this video to stay up to date with all my content. And if you want even more, you can watch or listen to my show at thedailywire.com, Spotify, or Apple Podcasts. Looking forward to welcoming you to the Sweet Baby Gang.